Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Happy PCE Friday. We just wrapped up a session in the Sector Secrets Mastery, and I'm showing you the notes from that session right now here. And the idea was to focus on some positions using historical volatility levels, hourly price movement ranges, in order to set up a really ideally a trade from either side, the red resistance or the green support, but really mildly bullish going into the event. You could see here was one of the first things we determined, our neutral to slightly bullish. The whole idea was to get long if price sunk into the hourly price movement range. So that's what we call a first come, first serve trade on a hot zone, a scheduled high impact event. And ultimately, one of the other really clarifying cues for this setup, and let me grab my drawing tools here. All right, so really three things to help clarify: sentiment, momentum, and trend, and then confirmation. Now, the most important the most important is trend, right? But we really didn't have one going into the hot zone. The second most important is sentiment. Sentiment meaning, are we above or below the previous session close? And are we above or below the 200 on the 5-minute time frame? And then the last thing would be momentum. But of the three, remember, momentum is the most twitchy, right? Momentum is the one that could show a move in a particular direction, but it doesn't necessarily need to be sustained. Whether or not momentum can sustain, follow through, actually pay us, is contingent on trend and sentiment, which is why I call that the least important. If you don't get trend right and you don't get sentiment right, if you don't prioritize those, then momentum really isn't that helpful. And so that's why when we're setting this up, what is the sentiment, right? What is the trend? And then lastly, in this case, what are the zones from which we would look to enter, right? Based on price. And that was this morning. All right, so let's get into the questions as always. And let's see what we've got here. All right, good morning. All right. Hey, thanks, D. Bolton. I appreciate that. I do. If you're not a member of Sector Secrets Mastery, you are missing out. Yeah, we've been really busy. In fact, the Lorna bot just sent the update for the alert. I saw that buzz on my phone here. Yeah, I just saw it buzz on the phone, and that was for FCX. So we're at least moving towards the break even on that. We've got our long position. Financials have been really great, gang. We've been long Bank of America, long JP Morgan, really more on a 1 hour daily time frame, short-term swing or long-term swing outlook. So JP Morgan's been great. Bank of America has been great. Financials have been strong. Stick with the long side on financials, unless you hate your money, in which case feel free to short financials. All right. So we want to stick with those trends and we want to have that sentiment read. Remember, gang, if we're really twitchy, if we're too twitchy about the direction we want to trade, that's where you're going to see this flip-flopping of, bullish, bearish, bullish, bearish. On a day trading basis, every morning we're going to have, one of those two outlooks, but that may only last for the morning. If you're swing trading, your longer term, your overnight, 1 to 3 day time horizon, 2 to 10 day time horizon, if that's flipping around bullish, bearish, I can say this with confidence. There's something wrong with the process, because a daily time frame, even an hourly, should not be that twitchy, right? Should not be changing. A daily should be far more steady in that. And that means that we're prioritizing sentiment and we're prioritizing trend. And the sentiment continues to be quite bullish in financials. And the trend, while a bit neutral, the trend that preceded the neutral environment was up. So we want to stick with the trend that was. That's another really important key. what was the trend that preceded the current trend? It's not just about the current trend, but it's also about what happened. What was this? What was the psychology? What was the behavior that got us to this point? And the market tends to want to continue what that was. A lot of traders will skew, will optimize for reversals. That's actually a mistake. Just remember that an object in motion tends to, stay in motion. And so continuation will be a higher probability outcome as opposed to reversal. So keep that in mind if you're getting tempted to sort of flip around too quickly, or if you find your process is doing that, something's broken in the process. And that's a really easy way to fix the process, because if everything's geared towards your sentiment momentum trend, um, if you have a really objective way to do that, I color code stuff. So even I can't argue with my indicators. It's either the color that it is or it's not. There's no subjectivity. That's where you'll find the steadiness in your setups. All right, and that's by the way why we're long Bank of America, and why we're long Freeport McMoran, and why we're long J.P. Morgan, and why we're long, even though it's not moving and grooving the way I wanted to yet. It's why we're long Disney. Okay. All right. Do I have any thoughts on AVGO? All right. So the first things that we're going to have to deal with in terms of the, oh yeah, and long gold. How could I forget? And long gold. Thank you, bot, for reminding me our long gold position. So AVGO is in an uptrend. San, it is in an uptrend. So I would focus on buy the dip. A couple ways you could do that. And I don't typically play $1,200 stocks. So I'm saying everything I'm about to tell you, I'll be straight up. This is not something I'm planning on taking. This is not something I have. There probably are other symbols within the group that AVGO would be within, right? So if I'm looking at who does AVGO hang out with, I might favor NVIDIA. I'd rather maybe look at a $530 some dollar stock, which is, by the way, also in an uptrend. AMD, Intel, Qualcomm, AMAT, TXN, Texas Instrument, things like LRCX and things like AVG. I'll probably keep on the back burner. But SMH is the strongest sector, right? It's the strongest sector in all markets. We take a look at relative performance. Oh, this is great. Perfect question for this, San. How many are familiar with trade this, not that? Right? And so if we're going to focus on the relative, and by what does that even mean, right? Okay, so for those of you who don't know, it's a relative performance comparison. So if I take a look at year to date, so just this month, right? What is the number one performing sector? Take a peek. It's semiconductors. That's a great place to look for outperformance. If you want to be a bull, semis, communication, tech, financials. Look at the top four there. So that's fantastic, right? As long as we're sort of casting our line in the best place to get a bite, we're always going to be better off. So, to me, it's not just about AVGO, but it's about all those other things that are trading within semis, and then why semis, right? So I agree. I would stick with buy the dip, and I would look long. For the, you mentioned February. For as long as semis are relative performing, and for as long as the trend is up, I would continue to focus on index sector stock, NASDAQ, semiconductor, and then all those gorgeous green names in the semis. And again, trade this, not that says, where is the relative performance? Where is the better structure? Does that make sense, gang? Right? So I don't really want to do that in consumer discretionary necessarily. We have to be very choosy about sectors that are not necessarily performing in a way that is indicating that tide is rising, and we'll take the stocks, we'll take the boats with it. All right. Okay. Next question is, where can I get the daily price movement range from Simpler Trading? From Simpler Trading. It's an indicator that I've created some time ago, and that is available back at the website. All right. Top Doc says, yesterday in class. Oh, one of the sessions, I gave 3 things regarding momentum. Oh, for the squeeze. For the squeeze. What did I say? Well, what I'm always looking for is a narrow range, right? That I would like to have, and it's also, it doesn't have to be a neutral environment. It doesn't have to be a neutral environment, but you want that compressed environment. You want it to be above the sentiment level. Depends on the time frame though. And then above the previous session close. What was there a third thing? I think there might have been some nuances I pointed out, but you've got the main things there. Yeah. So this is the way in which, actually, hey bot, let me see if I can't give you an example that's happening now. Is there anything in a squeeze that's got your attention, or anyone here in the room? Is there a squeeze? This could be a early or whatever. Is there a squeeze that's firing somewhere? Doesn't matter the time frame, 5-minute or daily. Thanks, gang, for the hair. I got it cut, and frankly, I'm not proud of this. I haven't brushed it yet. I mean, I combed it, but I haven't in any way done any styling to it. So it's just a mess, and it's in my face, and it's tickling my face. So sorry. I don't like to play around with my hair like a middle school child. But thank you. Let's see. There's a squeeze on the NASDAQ. Okay, so let's do this together and see. So maybe this will help. And then SPY. Okay, let's take a look. We'll take a look at two of them. So hopefully this will help. So in fairness, gang, this is John's indicator, right? This is something that John created. It's the flagship indicator of Simpler. And it's something that, he's going to explain better than any of us. It's absolutely the best way to identify and trade momentum. He's got decades of experience doing it. And so that's the way I would look at this. And I mentioned find a Darvis. There it is. Find a squeeze in the making, right? That's coinciding with the compression of a narrower Darvis. And then it's really the Darvis breakout that you're trying to take advantage of in a neutral environment. So there's the daily NQ. Now let's see if we go to the 5-minute and see what we've got here. All right. So on the 5-minute, and I probably should have Bot do this during one of her sessions in the essentials room. Yeah, because it's not something I tend to, it doesn't pop out at me because I'm really not a momentum trader, but the tools that I share with you all can measure that, because I'm not saying momentum isn't useful. All I'm saying is I typically like a trend. But let's say someone mentioned there's a squeeze on the 1 hour. Okay, see the Darvis, and then I'm just going to wait for the break. If I were waiting for the momentum, but here's what I'll say that I teach you all. And I think this might be that other element that we were talking about. This is the support of the range. Yes. This is the resistance of the range, right? And if I'm looking for sentiment momentum trend, I mean, obviously I want to be a buyer, right? So directional bias always applies. Whenever there's an indicator getting ready to tell me to do something, I better already know I want to be a buyer of calls or a buyer of puts, and I want to be a short seller or be long. And so I already have directional bias. That's so important. And so there's two things I can do. I could wait for the Momo, or I could take advantage of the oversold level. And I think that's what I was showing you all yesterday in the Simpler Central room as I was walking through how to find compressed markets. And then I'll favor buying the floor that's establishing with the Darvis during the squeeze. So let's say all of this is squeeze. I'll play the floor, because what that does is it gives me a choice to pay myself at the other end of the range before the momentum break. So that way I could maybe pay myself a bit, maybe take a third off the table, and then see and let the other 2/3 go if the momentum kicks in. So I'm happy to talk more about that, the way that I look at compressed markets, aka squeeze, when I see you all in the room. All right, so next up is XLE. All right, what are my thoughts on the XLE? Hey there, Nomo, how are you? It's not been benefiting in a way that would suggest it's got sector rotation on its back quite yet, which really is frustrating to me. But if we can get down to the daily price movement range, that would be awesome, because That'll allow me to buy at an oversold support level. Ideally, it's oversold with the slow stochastic. And then I can ride it to about the midpoint of the range and to the upper point of the range. That gives me two spots in which to pay myself. And so that's what I'd have to wait on, my friend. I need to wait on price to get down to the range like it did yesterday and get to the upper point of the range like it is today. And that's probably a pretty good example of daily price movement ranges at work. Right now, sadly, there's not a darn thing I can do with it. Yeah, right now this has got to basically refire. It's got to reset up again, get down to about 82 and give me another chance to get in again. All right. A lot of questions on Russell. Thank you, Nomo. Yeah, got to be patient. Got to be patient. I haven't talked about my nickname in a while. World's most boring trader. Thank you very much. Good to meet you. World's most boring trader. It's got to be boring. I think a lot of folks are looking for excitement when they trade. Making money is great. It's exciting, but it should be boring, right? You want excitement? Ride a motorcycle, go bungee jump. I've done them both. They're way more fun. They should be, right? It's way more fun, way more exciting, way more adrenaline than trading. Trading should be almost boring. All right. Russell. Well, yesterday, and I love the Russell. Yesterday, we played the number one weighted sector within the Russell with the KRE, and we're still in that long position. And so, yeah, I definitely want to see the follow through in the regional banking heavily weighted sector of the Russell. As far as what's happening here with the Russell, the range is kind of wide. So I would not look, the wider the range is, the less effective that trigger of momentum is going to be. So if I'm able to run a lot from side to side in a field, right? By the time I get to the other end of the field, I'm exhausted. Momentum's kind of the same way. But if it's a very narrow range and I'm running back and forth, I've got enough velocity to knock my water bottle off the table. I've got enough velocity to keep going, right? So it's really important that we look at all the Darvis levels that have formed on the time frame that we're looking at for this momentum breakout, aka the squeeze, and find the ones that are narrow. Let me show you the difference. Let me here. Let's do this. This is the Russell 1 hour, right? And I don't know what I'm going to get, but let's see what we got. Wider, it kind of took its time. Look how narrow that one was. See this one right here? Look how narrow. And then boom. See that? We want that narrow one. Take a look at the wide one here. Not that good, right? It's really more of an overbought, oversold. When it's narrow, use the momentum. When it's wider, use the slow stow. Okay, use the slow stow. All right, so I hope that helps. We'll talk more about this for sure. But the biggest challenge you're going to find when you're playing momentum is making sure the environment is narrow and compressed. That compression is so important for that ideal breakout and follow through. Gang, as always, thank you so much for being here for Charts and Coffee. I'll see you on Sunday for Top Tier Outlook. We've got some great football games. So I don't think that's going to interfere with any football. And we're coming up to F1 season. So good stuff. Or golf. I think in the evening, it'll be 6 p.m. So I don't know if you'll be playing golf, Eddie, but if you are, hit them straight. I'll see y'all then. Be good to each other. I'll talk with you soon.